Let's see what's happening with AMC stocks. I'll definitely show my portfolio and how I continue managing positions. We'll summarize the week, showing which positions closed and how I traded these stocks specifically. We'll also analyze the volatility, which has increased significantly. Interesting events are also occurring in the volatility smile. Let's start from the very beginning. Here are the trades I made. I sold additional call, 10 contracts several weeks forward. But I remind you that I have 1,600 shares purchased. Therefore, these sold call are absolutely safe. I also rolled over the 4th strike calls and received $13 for each call. There were 5 of them. I also rolled over the 6.5 strike. I already paid $10 for this. Considering the premiums, it can be said that I received nothing for rolling over and didn't spend anything either. I also sold 20 call options on AMC. Again, this position is safe because let's immediately look at all of this. As we can see, besides the sold puts, now yes, I have additional sold calls that hedge this whole situation. All transactions, of course, I will now enter into the table, but before I do, let me explain why exactly I was selling put options and what it's related to. I remind you of my philosophy that I can't predict price movements. I don't know where AMC will go. My main task is prudent position management, and that's what I'm doing right now. As we can see, I have purchased 1,600 shares of AMC, and I am starting to sell call options. Plus, I also have sold put options with a strike of $6, approximately $5. If the price of something rises, I won't lose money on it. So why did I sell call options now? The answer lies in volatility. As we can see, volatility is currently increasing significantly, reaching 180% for some strikes, but mostly around 120%. And I remind you that the price of an option, including call options, depends heavily on volatility, meaning the higher the volatility, the more expensive the option. Therefore, I am selling call options at a very high price, which is very important. It's not just about selling, for example, call options, but selling call options only when they are expensive. But again, it's not easy to understand. It requires real experience. Let's also look at the volatility smile. Of course, the situation has changed. It's evident that the volatility smile is increasing on both sides. Call options are increasing as well as call options, and on some strikes, as we can see, volatility is increasing even more on the call side than on the put side. Such situations are rare, but they happen, and it's essential to take advantage of them. Therefore, selling call options now is a very good strategy. But of course, considering that you are hedged either with purchase shares or, for example, sold put options. Just like that, I absolutely do not recommend opening any deals. Let's look at historical and implied volatility. The white line represents implied volatility, while the gray line represents historical volatility. As we can see, implied volatility is much higher than its historical values. What does this tell us? I remind you that besides trading the underlying asset itself, you can also trade volatility. Volatility is currently very high, naturally partly due to the upcoming reports, which I will also analyze. Therefore, I can say that volatility is likely to decrease to its historical values because returning to normality to its historical values is absolutely healthy, absolutely normal, and a good situation. Also, I can show you what artificial intelligence can offer us. We can set a volatility reduction, for example, to 40%, and it will suggest some interesting strategies. Some strategies, of course, show a 100% chance of profit, but again, nothing is ever 100%, and what they offer us is to sell 2 options with a strike of 3.5, a put and a call option for July. But again, you shouldn't just open this position like that. I wouldn't advise you to trade based on bloggers' recommendations or artificial intelligence because it can lead to significant losses. As we can see, this is how the profit from this strategy looks, and we can also compare it with other strategies. In principle, this is what I use. I also sell options and earn from it. Let's then look at the volume of options trading, a very important thing. As you can see, there are huge walls at the $3.50, $4 levels for call options. As for put options, there is practically no volume here. The largest volume is in call options. This means traders are betting on increases. As we can see, there are 2 very large walls at the $3.50, $4 levels. On one hand, this is good because investors are betting on growth and call options outweigh put options. But on the other hand, it's not very good because for the stock to start rising, it needs to break through these 2 huge walls at $3.50, $4. As we can see, AMC tried to break through $3.50 almost a week, but it couldn't. Some may wonder why we stopped at $3.50. There are practically no volumes here. But in reality, there are volumes. This is a huge wall, and it simply didn't allow the price to move further. I always show these volumes in every video. Just look at what levels exist in the derivatives market, and there's an even bigger wall at $4. So of course we won't break through it just like that, but I fully admit that the report might help us do so. Yes, I'm saying that if the report is very good and we grow above $4, then of course it can give a positive impulse and AMC stock might rise to $5 or $6 at some point. In principle, my portfolio is absolutely ready for this. I can make a lot of money if the stock grows that much. So let's keep an eye on these huge walls. Now let's get back to the table. I'll record all my sold call options and show the profit we've made. As we can see, I experimented with several options, 15 at $4.50, 59 at $4. Here they are recorded. This is the net profit from these options. The total income amounted to almost $200. I've earned $2,256 on AMC. Now I'm recording the new trades I made. I sold 10 call options with a strike price of 4.5, priced at $8 each option. And of course, let's not forget about the commissions. Also, I sold 10 options at $5 each. There were no payments made for each option of $15. Also, don't forget about the commissions. Also, I sold 5 options at $11 each. Here, it's worth noting that these are different options because mixing them with different expiration dates is not allowed. But again, those who understand will understand talking about. And naturally, I also sold 5 options with a strike price of $6. No payments were made for each option of $13. Also, don't forget about the commissions. So in essence, I sold options for an additional $300, all done as safely as possible. Again, I absolutely do not recommend you to follow my trades. It's very dangerous. You must understand the logic. If you understand the logic, then you should trade on your own. I don't understand why you're not making money on your own. If you don't understand the logic, then you shouldn't open these positions. Let's summarize the week. Today is the 4th of May, 2024. I remind you that my goal is to surpass AMC. So we started the experiment with $10,000. My strategy, my management against AMC stocks, who will win? And at the moment, AMC closed at $3.30. I'm entering this into the spreadsheet. And let me add my earnings here. And as a result, we see that my portfolio has hardly changed over the week. It only fell by 0.1%, but AMC fell by 3%. Therefore, as we can see, the gap between my strategy and AMC has become 30%. Let's take a look at the moment. The blue line represents my strategy, and the red line represents AMC stocks. As we can see, the graph is quite interesting. That is, during downturns, I stabilize my portfolio through smart position management by working with derivatives, with options. As we can see, during sharp downward movements, my portfolio doesn't fall as much. But when the stock starts to rise, my portfolio also starts to rise. We see that the same thing happened. AMC stocks dipped a bit, while my portfolio stayed put. And as soon as AMC stocks start to rise, my portfolio will start to rise too. That's what smart position management is all about. I love doing this. I always attach this spreadsheet to the description. You can come in and see everything for free as clearly and understandably as possible. Now let's get back to AMC stock. What can I say? But I remind you that many YouTubers who gather views mislead people about some incredible short squeeze, which supposedly will go up to $100, $300, or $500. My friends, in my opinion, this is not true. They are deceiving you to gather views and make money. These bloggers haven't been doing anything for 2 years. All they do is deceive and lie to you. And AMC just continues to fall and fall. Again, I fully admit that AMC stock could rise to $10. I fully admit it, but some incredible short squeeze is just not true. All these bloggers are showing some trashy news. My friends, I show you everything as transparently as possible. I don't know how else to make it more transparent. I mean, I'm showing the portfolio management logic. I'm showing how you can actually outpace AMC in practice as transparently as possible. You can check out my entire playlist dedicated to AMC stocks. Each video from start to finish, what I think and how I structure the portfolio. No one else shows you this. Everyone just says they hold AMC or something, my friends. Well, it's all talk. I don't respect such people. Yes, I remind you of my philosophy that I can't predict price movements. I don't know where the stock will go. My task is intelligent position management. So I've chosen 3 stocks, AMC, Tesla, and SoFi, where I build and manage positions through derivatives. That's how money is made. Money is made not by belief, not by buying and hoping. Money is made by really intelligent position management. My friends, it's not too late to get out of this trap. If you've lost all your money on AMC, it's okay. Very soon I'll start a new experiment starting absolutely from scratch, like most people. Imagine you have a new portfolio, and I'll start from scratch too. And I'll tell you in absolutely maximum detail what stocks I'm buying, how I'm forming the portfolio, what strategies I'm using. All the same as I do with AMC, only with a completely real account from the very beginning. For this, I'm creating a special spreadsheet. I constantly refine it. Here, all the information about my transactions will be displayed, about which stocks I acquire, how I form the portfolio. Everything will be maximally transparent, and most importantly, for free. Yes, you heard it right. Where can you see that when a blogger freely shares this information? Any person at any time can come and see what and how I buy. This is the most important privilege for me and what I'm proud of. I also advise you to watch my previous videos. Here I talked about the principles on which I will form my new portfolio. Everything will be maximally transparent. Very interesting. Subscribe not to miss the start of this experiment. If you have any questions, write them in the comments. I will answer your questions. Good luck to everyone.